It's so fancy in here.
Yeah, it is.
It's nice, yeah.
Very nice.
Comfortable. I feel like I'm.
Can you guys
very close to you.
hear me well?
You too?
We're right here.
Yeah. Oh, I feel like it's
I give it, yeah,
there?
yeah.
Oh, okay.
Okay. Alrighty. So, hello everybody. My name is Ulysses Teliquez, and I am from Keller Williams. And I got my partner here who's
Jose Mendoza with Karma Mortgage Solutions.
Mm-hmm.
And today we're going to talk about the process of buying your first home and starting from meeting with the agent to obtaining your keys to your property. And so I'm going to do it English, and then we're going to go over in Spanish. So the process, so the first step to obtaining a home ownership is obviously we got to talk to an agent. That way the agent, our duty is to help you make the process easy, and obviously help you with the contracts because they can be a little tricky. And the second step is speaking to a mortgage lender.
Yes.
Same, right?
As they always say that you should get pre-approved first, and it really is the truth. That way you know what you can qualify for and what's going to make the dreams a reality.
And once you get pre-approved, I'll obtain that information, and then we could go and view homes. The following step, once we view the homes, is and we find the home that you guys like, then we make an offer. And then once that offer gets accepted, we enter into negotiation. And then the next step is we go under contract, and then we open up escrow, and that's where the earnest money deposit goes, and then
We also kick in at that point too, because then it's,
So the negotiation would be with the people who have the home per
who's selling
se.
it? Yes.
So like say, just an example, if it's 500,000 and we say, oh, how about if you sell it for us 490, something like that, no?
Mhm.
Or right?
it's a
Give or take.
negotiation.
So yeah.
Yeah.
So then after escrow opens, then we're gonna have an inspector go and inspect the property, because we want to know what's wrong with the property. And that's a good thing, because you're buying this property, so you want to know everything about it. And then we have an appraisal, where we have an appraisal come and appraise the property to make sure that the property is actually what the seller is selling it for. And then the next step is a final walkthrough, where we want to go look at the house to make sure that it's in the same or better condition from the previous time that we viewed the property. And then the next and final step is close of escrow, and that's when you receive your keys for your new home.
Yeah, that's the best part.
Yeah.
So Jose's gonna talk a little bit about the mortgage.
Sure. With the mortgage process, like I said earlier, the first thing we want to figure out is what you're pre-approved for. What is the bank willing to do in terms of helping you finance property? What are you going to qualify for? And so in that process, we're going to be verifying your income. You're looking at your credit report to figure out what's the debt. So that way, you know that, okay, here's what your mortgage payment's going to be, plus all your debts. Does that really make sense for you? And then, of course, we're also, the bank's going to look to verify, well, you know, you're gonna have down payment and closing costs. You know, it's providing you with an estimate for the closing cost, so that you know it's like, oh, okay, this is what I'm gonna be having to pay to get this home. And then, you know, if all those factors are there, then it's like, oh, okay, here's your pre-approval letter. That gets the leases going, and so that, you know, you're finding something that's in your price range. You know, that you're not, you know, you're going to see a lot of homes that you're going to love, or you're going to fall in love with. You know, you want to make sure that it's something that's going to make sense, that you can afford, and that you're not going to be disappointed. And so in that process, I know that like there's, to go on a little bit of a sidebar, you know, there's things like when people sometimes say like, hey, well, what's the difference? Because I got a letter in the mail that says that I'm, you know, already pre-qualified for the mortgage. So why do I really need to talk to you guys for pre-approval? And it's because there's a difference between being pre-qualified versus being pre-approved. And so pre-qualification is more just like you're just talking to somebody and you're kind of giving them your numbers. It's like, oh, well, how much do you roughly make? You know, and you get an idea maybe, but it's not really a full analysis, if you will. And so with the pre-approval, you know, like I said, we're going to verify all these other things, but also, like I said, we're going to provide you with the estimate so that you have a sense of what you're going to be having to come up with. And also, it's not just that the mortgage that is part of the analysis. What's the payment? It's like, hey, well, there's insurance, you know, for the house. There's property taxes as well. Depending on the type of property, you may have like an HOA or something. And that's going to be the monthly payment, if you will. When you add all that up together, that's your mortgage, truly your mortgage payment. And so pre-approval process helps to really highlight all those things, you know, to make it clear. And so that way it's not going to be something that you're getting yourself, you know, over your head. And it's going to be the home that you're in there for a long time. So.
Do you guys have any questions? I know you guys want
Yeah, we
to.
did like mid conversation. No, so far it's all good. Thank you. Also, Ashley.
Yeah, and you know, our job as an agent is to really try to make it a smooth and smooth process. But sometimes you can get things happen, and that's where we try to, just try to make it as smooth as possible for the buyers and stuff.
And I have a question. Do you guys only help in Santa Cruz County?
No, we could help throughout California. We have other Keller Williams. And we have other, we could talk to other agents at other Keller Williams as well.
Yeah, we're licensed in the state of California, so we can do loans.
Anywhere in the California.
Yeah, and then we're also licensed in Texas, so
There you go.
loans in Texas as well. So.
All right, so I think no questions. Good. Okay.
No.
So
I mean, it's so much information, but and it seems like easy, but it might be, there may be some glitches here and there. Yeah.
Yeah. So I mean, that's our job, is to make it easy where you guys don't have to worry about the in between stuff that happens, and we try to take care of that.
So I'm sorry, I'm asking questions, but that's why we're here, right?
Yeah.
So it's okay. like a little blushy, just saying that. So we, when purchasing a home, we could put like the mortgage or the loan, the property taxes and the insurance all in one.
Yeah.
I mean, would it be? It's possible.
Yeah, you'll have, like, as part of the mortgage, it might be a requirement to have what's called an escrow impound account. And so, and basically, like, when what that is that it's kind of a forced savings plan, if you will, because it's your money that you're putting in as, and the bank is putting it into a savings account on your behalf. And so basically, when it comes time to renew the insurance policy, for example, then since you've been paying into it, then the bank has the money saved up and they'll renew the policy for you, you know, and so that kind of helps. But just in terms of being the first time home buyer, you know, it's like, oh yeah, pay for, you know, you're gonna pay for the first year up front. And people will sometimes ask that as the next question. It's like, well, why do I have to pay for insurance on a monthly basis if I already paid for the full year up front? And again, it's because it's a savings plan, so to speak, and you're saving it up so that, or the bank's helping you save it up so that when it comes time again to renew the policy, then they'll pay it on your behalf. And then the same thing with property taxes. You know, property taxes, if you're a first time home buyer, you may not know that it's like, hey, they come due twice a year. And everybody always, well, not everybody, you know, most people will wait till December 10th, which I like to say, it's like, okay, like if you're waiting till December, then, you know, 15 days from now, you're gonna have to pay for Christmas gifts or Kwanzaa gifts or whatever it is, you know. So it's good that you've already saved up the money for the property taxes. And then the other one is that the next cycle for property taxes is the bill comes out on February 10th. Everybody always waits till April 10th. And then, you know, it's like, oh, okay, well, 5 days later, you're gonna have to pay your federal taxes for, you know, so it's a good thing that you have an impound account or an escrow account, because again, the bank's gonna pay. People at first tend to be like, oh, Brad, do I really need that? But when it happens, and once they're, like I said, you own the property, and you know, like I said, you're dealing with just moving in and all that, all those little details of where do I put this and where do I put this?
Right.
It can get past you. So having that impound account just makes it so much easier. And people find that they really like having that impound account because it's like, ooh, man, I had federal taxes due, and thank God I didn't have to pay for property taxes and my federal taxes. It's like that part was done, you know, what a relief. So
what are some of the like paperwork that, you know, somebody looking to get a loan qualify? What are the paperwork do they need?
Oh, like in terms of requirements and such, like what we usually ask people, try to keep it simple up front. You know, it's kind of like, hey, just give us the 2 years of tax returns so that we can help to, you know, to verifying like your historical income. You know, what do you roughly make? And like if you're self-employed, it's like, oh, okay, you know, it's good to kind of get a sense of an average of what you're making, you know. And then of course we're like if you work for somebody, then it's like, okay, we'll bring in 2 current pay stubs because you might have gotten a raise from the previous year, so at least now we know what you're making and we can calculate out what your new income is, levels are, and so that's helpful. And then the other thing too is that like 2 months of bank statements in order to help, because the bank wants to verify that your funds for the down payment and closing costs are what they call seasoned. You know, they're sufficient, and then that they're seasoned. And seasoned means that it's just that you had it in the bank for at least 2 months. A lot of people sometimes will be like, depending on their culture, you know, that it's like, well, I don't like the banks. You know, I like to keep my money in, you know, buried in the backyard. I had it one time. You know, I had some clients who were Asians, and they really had an aversion to the banks. And I remember, well, you know, everything looks great, you know, in terms of your qualifications, you know, the income's there, your credit's, you know, good. But where is the money going to come from to be able to pay for the down payment closing costs? And I swear, you know, they reached back and pulled down a cookie jar, and they opened it up, and it was full of gold nuggets. And I was like, well, okay, you know, they're gonna have to get, you know, cash it out, and you know, and give us the paper trail of where that money, you know, where it came from, put it in the bank, so that way you can, you know, close on your transaction. And it's just people don't really, you know, think about these things. That's why it's good to get pre-approved first, right? Because it's like, oh, you know, like people will think it's like, oh, okay, well, I have the money, don't worry about it.
Yeah.
But it is part of the process. These verifications are necessary. And then of course, we're going to verify your credit report. So I usually ask people, it's like, oh, just bring in a copy of your driver's license and your social security card or whatever. Because, for getting a loan, for regular agency loans, as we call them, you have to, have a valid social security number, or, and you'll get that if you have like a permanent residency. So it's like, okay, we're going to verify that piece, that it's a valid social security number. And then also the credit report will tell us like, oh, these are the monthly debts that I have. And when you add all those things up, plus what your payment's going to be, kind of like what I said, all those, things, then it's like, okay, when you add up all these debts, does it make sense for you in terms of your total income? Whoever's going to be on the loan with you, we're going to look at all of you and all of your debts. It's like, does it make sense? Kind of like what you were telling me earlier about when you bought with your family. It's like, okay, that's the process I imagine you went through as well.
Yeah.
It was like, okay, they looked at everybody's, and then you guys could go and have that discussion. Like, okay, does this make sense for us? We can afford it because it's going to be this monthly payment.
Yeah.
It's like, yeah, we pay that more right now in the rent.
Right. That's what I'm saying.
So that's my payment, and then and including the car and the credit cards, and great, we can make that work. And then the bank is giving me the pre-approval. Okay, let's roll.
So what about because I've sometimes they ask is it better to pay off an existing debt before, or should they just try to qualify with the debt?
That's where the analysis comes into play, and that's why it's important as well. Because sometimes people will think like, oh, well, we're gonna have to pay off the car, and you might owe, I don't know, whatever, just pick some number like $30K for the car, and now you're cutting into your savings, and and it may not be necessary. For all we know, it's like, hey, with your income and your husband's income, you qualify just as is. You don't have to pay off these big debts, or it may be that we can advise you. It's like, hey, well, instead of paying off the car, you have these other debts over here that are, I don't know, you got your teeth cleaned, and you bought a big screen TV or something, and between those debts over here, they add up to X, and that's what you need to qualify. Just pay those off, and those can be total, some amount, like it's very minimal in comparison to paying off the car. So it's like, oh, okay, pay those debts off, and now you're going to be able to qualify, and in the process, by paying off the right debts too, you might end up raising your credit scores, which ultimately means a help you as well, because the higher the credit scores, then the lower the interest rates, the lower the down payment requirements can sometimes be, the lower the reserve requirements can be as well. And so, those are the benefits, like I said, of that analysis that we provide you, and the guidance to say, it's like, okay, yeah, maybe pay these off, and you're going to end up in a better situation.
Now that you touched on credit score, what's considered a good credit score? What do you guys consider?
I like to say that a good credit score is basically what's going to allow you to qualify. Because not everybody has the 830, like me. It's like, hey, sometimes, people will say like, oh, I have, bad credit, and I can't qualify. There's no way I'm going to qualify for a loan. And it's like, well, once we look at it, there's programs that, again, A, we might be able to help you increase your score, or B, that there are certain programs that it's like, okay, you can qualify for a loan. You might end up with a slightly higher interest rate than this person over here who has better scores, but you can still make it work.
Yeah.
And that's the critical thing. It's like, okay, it doesn't have to be, like I said, super high scores. It's like, hey, what's the score that gets you in the door?
Yeah. Okay. Okay.
So,
I have a question because you touched that on credit score. Okay. I'm not gonna say my credit score is bad, but it's not the greatest. It's not like I'm behind on my credit cards, but the thing that I just did, I consolidated them about 6 months ago to that natural debt relief. So I put all the credit cards into one thing. Yeah, it went really low, and now I just thought it's a little higher. But I know my daughter, who's she's single but she's an adult, and her credit score is really good because she was shopping for cars, and her credit score is close to 800. But it's like a ghost credit score because I help her open up a credit card, and she uses it here and there. She doesn't want to use it. She doesn't want to get in debt like I do. So would it be possible for her to be? How many people could be on a loan? That's my question, actually. I went all around just to ask that.
yeah.
Like I know her credit score was 780 versus mine was 590, I think. I mean, which is good considering, but if you look at the credit score, it's like I was never late on my credit cards until they told me, if you're going to be in this program, you have to let them go bad for 90 days. I'm like, I don't, that's what I don't want.
So,
But it helped me out because it's one payment versus 10 payments.
so
And it's way less.
that's a good question.
Yeah.
I think like something like that would be something maybe get in contact and schedule an appointment for, or would you?
Wait, are you the lender?
Yes, we're mortgage brokers.
Okay, well, because I don't understand. Okay.
Right.
Sorry. Okay, there's so many okay. So you guys are the ones that figure out the things of the loan.
Yes, to help you.
Okay.
It's kind of like
Sorry, it's just-
Don't
I
answer
know.
great question. It's confusing.
we're kind of like the interface to help you, in that communication with the bank. So that they, in terms of being able to help you through the process, because it is confusing. It is a lot of details, and so we help you to stay on top of it and make sure that you're being able to get this through. And in kind of response to like what you were saying earlier about multiple people on the loan, usually, I know some banks have different rules, I'll say that up front. Most of them, I think, would say having 4 people on the loan is kind of their max, but some other, I've seen it where other, I think I've had one loan where I had 6 people on the loan. But the one thing too to add is that it's like the bank's going to go off of you get like there's 3 credit bureaus, and so you get a score from each one. Each have their own formula for calculating out a credit score, and so there's Equifax, TransUnion, Experian, and you get a different score from each one. And so the bank will look at the middle score of the 3 typically, and then okay, well you have your own set of credit scores as well. So what's your middle score? And so they'll take the middle score from each person, and then the lowest of the middles, if you will, is what is the credit score for the loan. Does that make sense?
Really?
So that's sometimes what people will say. It's like, oh, well, my daughter has great credit. Let's use her credit instead. Let's use her score.
You're talking about credit scores, and like I said, we were shopping, and she goes, I go, well, don't run your credit because I know every time you run it, it goes lower. So we only, we went to pay federal and, 780, and I'm like, I had it once upon a time, but I don't have that credit score. But anyway, so what's the middle score? Equifax or?
Well, there's the 3 bureaus, and they all have a different formula, but it's going to be like I said, typically the middle score of the 3.
Middle number.
Right, and then like I said, you have your middle score, you have your middle score, you have your middle score, and say the 3 of you are on the loan, then it's like, oh, okay, well, we'll take the bank's going to use the lower of the middles, the lowest middle score, basically, and then that'll be how things are determined, So, in terms of the rate.
Mhm.
You know, again, your credit score can impact multiple things. But that's kind of generally how it works.
Mhm.
Does that answer your question?
You did. So what would you consider a good credit score, like what number to be able to qualify?
Well,
I mean, I know you're talking like it's different, the middle one, but I know like not even 600 is a bad credit. But,
right, it depends on the program. So for example, if I remember off the top of my head, conventional, I think has a cutoff at around 640 or 620, you know, and then FHA can sometimes go a little bit lower. And you'll see, you know, advertisements for, you know, but again, your credit score, you want to be able to get a higher score. And so like, if your score is below a certain threshold, and like you were saying, you know, I think if your score is below like 620, then it may require what's called a manual underwrite from as opposed to a different process. But that means that it's like, oh, okay, you're going to be limited to debt to income ratios of 45%. You're going to be required to have possibly reserves, 6 months worth of reserves on, you know, that just sits in the bank, right? You're not using it, you're not touching it, but they just want to make sure you have that reserve. And so that's where, again, the more you can do to raise your score, the better. And like I said, there's what we call like a rapid rescore process, where you can look, we can sometimes advise you to say, like, you know, if you have X amount of, like, you know, for just as an example, right? It's like, you know, if you take these 2K and pay off this credit card, you know, this installment debt over here, you know, there's a potential that you could raise your score, say, you know, 60 points. And that 60 points is going to be huge. It'll make it, you know, your credit, your interest rate may be, you know, a quarter less or 3/8 less. And it's just, it really makes a huge difference in terms, especially with prices in this area, that it's, you know, loan amounts. It's like, oh, okay, well, that, you know, just dropped the payment $200 a month. Thank you. That's, you know, that's great. And so and that's what I was trying to allude to earlier, that it's like, that's the process, that's the benefit of doing the pre-approval. Because some people will just, you know, it's like, no, I don't want to do this yet. I just want to look at the home, figure out the home first. And it's like, you know, it's like, that's not the way to do it, because you'll end up in this, again, you may be hurting yourself, because it, you know, it can take time sometimes to fix things. And if you're went through the pre-approval process, then you at least bought yourself more time to be able to make those improvements, and you can benefit, rather than that it's like, well, you know, you're in contract now, and it is what it is, so you're gonna have to just close this way, maybe with that higher interest rate. And we wish we had more time to be able to make these changes, but it just kind of, you know, is what it is right now. So that's why, like I said, when you know, real estate agents are advising people, it's like, get pre-approved first. It really is, because there's a benefit to you as the borrower, that you're going to have the benefit of being educated on the process and what things can I do to make it better. Like you were asking, you know, earlier, or you were asking, it's like, do I need to pay off all the things? Like, no, maybe you do, maybe you don't.
Yeah.
But there's a lot of benefit that comes from getting that pre-approval.
So, so what the dream thrill?
Oh,
The California
okay.
The what? The dream what?
There's a program called that's down payment assistance. It's an agency, like a government agency, or quasi government agency. So it's legit, you know. And it's down payment assistance. The California Dream for All is one of the programs that they have. But what I advise people is that it's kind of like a lottery system. So you have to get pre-approved prior to April 1st. No April Fool's joke there. That's
I was
legit.
just gonna say
I saw it coming. So you have, so if that's something that you're considering, it's like, hey, you gotta get in there again, get that pre-approval. But it's if you have your pre-approval from a broker, and then there's a class that you also have to take because in that program, like they'll do up to a 20% down payment with a max down payment assistance of 150,000. So if you take whatever that works out to be, like a purchase of 750,000, right? Which for this area, it's like, okay, great, that'll be great. But there is a catch, and that's why you have to take the class up front, because it's what's called two things. It's a silent second, so you don't have to make a payment on it. And it's like, wow, that sounds great,
It's like a grant?
No, it's not a grant, it's a loan. So it's a silent second loan, so that helps with qualifying. Because it's like, okay, that's not part of that payment that you're having to make, right, every month. So that helps up front with that piece. And then secondarily, but it is a loan. So eventually you're gonna have to pay it back. And the way you pay it back is that when you go to sell it or refinance, then you have what's called shared appreciation. And so how I put it to people, it's like, think of them as your business partner. If they're lending you 20% for the purchase of this house, then when you go to sell it, they're gonna want the loan for you to repay them the loan, and they want 20% of the shared equity. What did the value went up, by, say, just to keep the math simple, by 100,000, then you're gonna also pay them back the loan and give them 20% of that 100,000, 20K in this example. And so it's, they ask you to take that class up front so that it's clear, because, there's been programs like that in the past, and people are sometimes taken aback by it. They're like, what? I'm the one who has to take care of the house, and I'm the one. Like, yep, that's the deal.
But if you never sell, how about if you never sell the house?
If you never sell the house, that I'm not sure about. I think that it's like if 30 years passes, and maybe then it's a wash. But I'd have to. That's probably one of those items that they address in the class. So it's like I said, it's a requirement to take that class. And like I said, if April 1st is around the corner, then if that's something that interests you, then get pre-approved and take that class, because it's a lottery system. That's the other thing. Oh, that was a big thing about that program. It doesn't, they only have limited funds, so they can't give 150,000 to everybody. And so it's a lottery. And so that's why I'm saying April 1st is the kind of the deadline, because come that day, that's when they're, probably the day after or whatever, a week later, they're gonna do their lottery. And, whoever is fortunate enough to get it, then they'll receive like a letter, kind of like the pre-approval letter. It's like, okay, you can go shopping now. And you have, like a reservation of that 150,000, you and, maybe not you, maybe whoever got lucky, right? Whoever won the lottery, because, is part of it. But so it's not like a guarantee that you're going to get it.
Right.
And that's what can be, like I said, that's why it's good to kind of, as I tell people, buying a house, and it's a process, and you're learning. There's a value in the power of education, power of information. And so, is it worth it for you to, pursue that California, the Dream for All program? Again, it's a lottery. So you feel lucky.
Is that like the only program there is?
No, they also have other down payment assistance programs. The same agency, for example, they also have where they'll do, for example, on a FHA loan, the minimum requirement is 3.5% down. And they have a separate program that they'll do it as a loan. Again, it is a loan. You have to pay them back that 3.5%. But that one is what's called simple interest. And if I remember off the top of my head, it's 3% simple interest. And so it does, it's a good program when you go to sell the home or refinance. And it's like, okay, pay them back that 3.5% plus whatever the interest accrued. And so that's another option for a program. Does that make sense?
And that program is also good anywhere in California, right?
Yes.
Or just Santa Cruz County? No, anywhere in California.
Yeah, but there are
Restricted.
income limits on it, but they're pretty high.
Mhm.
I remember, I don't remember off the top of my head, but it was like, for Santa Cruz County, it was like 210,000 or something, It's like, oh, okay. A lot of people can qualify for this, but it just depends if that's, something that makes sense for you. And anyways,
Yeah, so before we move on, because I want to ask you one more question. What if the buyer likes a house that's worth more than what they qualify?
okay. Yeah.
What happens?
Well, it's, I'm sure that happens a lot. Well, it's kind of one of those things where, I would say as an advisor that it's like, hey, that's why we're here to try to, be advisors to you, that it's like, these are going to be your numbers, does it truly make sense to stretch yourself, that far? And, I tend to be that way with people, with my clients, or to ask them those questions back too. It's like, does that make sense for you? Maybe, your kids are going to be going off to college soon, or whatever it is that it's like, okay, you're going to be stretched, 2 years from now, you're going to be stretched a little bit more. So does it truly make sense? But the other thing too is that, well, there's other options of, like, maybe you might look at the two houses that are right next to each other, and one has been remodeled, redone, and everything, and it's like, okay, well, that one's this price. It's higher because it's already been fixed up. The one right next to it, it's in the same neighborhood and everything that you wanted, but it needs more work, so you might buy the one that needs the work, right? And do what's called sweat equity. You're gonna make the improvements to the property over time, and so that's another option that one could consider, that you'll eventually turn, this house into the dream house that you really want, Another potential option is that, well, it's like, sometimes with real estate, it's like you don't want to shoot for the fences, as they say in baseball, right? That you'll start off with a condo or a townhome or something a little bit less. It can be a house, but it's less, and you're going to build your wealth over time. And so, as what I've seen people do, like my own, one of my nieces, she bought her house, did the sweat equity, and with the equity that built up, she was able to pull for a down payment to go buy something else. She had the rental income from this property that helped her with even better, so she could qualify for more, and she could go to the next house, and it was a better house for her in a better neighborhood, and that's kind of been her strategy for being able to get there, if you will. You might have, like a parent or somebody that or a family member that you can ask as well, to be on the loan with you as a co-borrower. And so their income, if they have good income and very low debts, that's going to help you so that you could qualify for that bigger property. So there's different options that are potential, available to you. It's just, and that's where, as advisors to you, we're trying to help you see what's possible. And, at the end of the day, it's going to be your decision, what makes sense for you. But it's like, okay, here's option A, B, and C. It's, what do you think?
Okay, so now we're gonna switch gears a little bit,
Sure.
and because I have some Spanish speakers here, so I want to also translate. Okay, you guys ready to learn some Spanish? Okay, okay.
Can I ask
Right.
the last question before we move
Yeah.
on to the Spanish? Or maybe I could even ask it in Spanish if you want. Okay, so my mom pretty much has her house paid off. She got some money out. She's older. And she was telling me, well, why are you paying so much rent? I'm like, well, that's not rent, sorry. But she was saying, how about if I, you look for a house and I'll help you, like she does the loan. And I said, well, I don't know are we able to do that? But the problem is she doesn't have an income. She's already retired. So she's only, as they said, Social Security or whatever she gets, because she's older.
Mhm.
So, is it possible or no?
Off the top of my head, I would say it's good to analyze it first to see what truly is an option. But since you're saying, your mom was older, she's owned the house for a long time.
Yeah, well, it's pretty much paid off.
Pretty much paid off.
Paid off.
There's a possibility of doing what's called a reverse mortgage in her case. And the benefit of what's like a reverse mortgage is that the qualifications are very minimal for income. What they really want to see is because you're not going to make a payment on it. And so the income qualification is just basically, is there enough income there to pay the property taxes and the insurance?
Oh.
And with a reverse mortgage, you can do like a cash out and have a lump sum that'll help you to be able to go and buy a property. As long as she stays in that house, it's like, okay, well, that mortgage is in place. She can do a cash out, give it to you, and you could buy another house with that lump sum. It's just one of those things where it would be like in that case of a reverse mortgage, you have to take a class for that too. So
Right.
It's clear to your mom that it's like, these are the ramifications of having a reverse mortgage. If you're not making a payment on it, then that principal is slowly going up as well. The idea is that she can stay there for the rest of her life, without ever having to make a mortgage payment. And it's like, hey, if that makes sense for her, that she's helping you, as her daughter, and that's what she wants to do. And like I said, she understands how the loan works. It may be a good option, I just off the top of my head.
Yeah.
So, but it's good. That's where it's good to talk to somebody that it's going to give you, like I said, lay out what your options are. And then that way you can make an educated decision. Because it's like people sometimes get afraid of those reverse mortgages,
Right.
but they can be a
And
good solution.
that's probably my mom. She says something and maybe the minute she's there to sign, then she changes her mind. But yeah, okay. You never know.
Yeah.
So it happens.
Right. Yeah. Yeah.
Okay,
Alrighty,
go on.
cool.
Thank you.
Alrighty, so now
In
the
the
Spanish version.
Okay. Bueno,
Alright.
vamos.
So, mi nombre es Ulises Teliquez, estoy aquí con Keller Williams y ahora vamos a hablar del proceso de cómo obtener tu primera propiedad. El primer paso es hablar con un agente y después cuando habla uno con el agente es para nosotros para ayudarles y que el proceso sea fácil. Entonces el siguiente paso es hablar con un prestamista. En este caso, José.
Hola, yo me llamo José Mendoza, soy un prestamista y trabajo para la empresa de Karma Mortgage Solutions y nosotros hacemos de préstamo o la hipoteca para poder comprar una casa.
Sí, después de que hablan con un prestamista, entonces depende de lo que califican, yo voy a agarrar la información y ya después vamos a ir a ver propiedades. Entonces ya de que vemos ciertas propiedades y encuentren la que les gusta, vamos a hacer una oferta. Después de que el vendedor acepte la oferta, entramos a negociaciones. Entonces, después de negociaciones, vamos a entrar en contrato. En este paso es donde uno deposita el down payment. Ajá, el entre. Y después de entrar en contrato, el siguiente paso es, vamos a llamar inspeccionistas que inspeccionan la propiedad para saber todos los detalles que tiene la propiedad. ¿Por qué queremos saber los detalles? Porque va a ser su casa y usted necesita saber lo que está comprando. Y luego después van a hacer una valoración de propiedad para ver si realmente la propiedad cuesta lo que el vendedor está pidiendo. El siguiente paso es el último paseo de propiedad. Y este paso vamos a ir a ver la propiedad otra vez para ver que la propiedad esté en las mismas o mejores condiciones. Entonces después el siguiente y último paso es el cierre de contrato. Y en este paso es donde se les entrega las llaves de su propiedad. Entre medio de los pasos, entre medio hay muchas cositas que pasan, pero ahí es donde yo les ayudo, donde voy a ayudar a que el proceso se sienta fácil. Entonces, José va a hablar un poco del proceso del préstamo.
Sí, y como para el préstamo, pues lo que es importante es hacer una preaprobación y para eso pues se requieren ciertos documentos, como pedimos que traigan 2 años de los Ws, 2 y los taxes y también 2 meses de estado de cuentas para verificar de dónde viene el enganche y para los gastos de cierre. Les pedimos copias de su identificación y de la tarjeta de seguro social para cuando vamos a correr el reporte de crédito tenemos su nombre completo y pues el domicilio también y también el número de seguro social que esté correcto. Y con eso pues comenzamos el proceso. A veces hay más cositas que el banco va a pedir, pero comenzamos con eso. Luego, si es necesario, pues entonces pedimos documentos adicionales.
Ok.
Y si ya me los olvidó también, pues también unos talones de su trabajo para verificar lo que es el ingreso de hoy.
A ver, José, ¿y qué tal si tenemos deudas, si debemos un carro, es mejor pagar el carro o tratar de calificar?
Cada situación es único y por eso estamos corriendo el reporte de crédito y analizando para poder mejor avisarles qué es lo que sería mejor pagar, porque no siempre es de nomás pagar el carro, tal vez la deuda de eso es tan grande que vas a tener que esperar para poder comprar, porque ahora ya pues ya se fueron lo que tenías en ahorros, ¿no? Sí. Y puede ser que hay otra solución y que te ayuda para calificar si pagas ciertas deudas y más te sale mucho menos que si habías pagado el carro. Y entonces eso es un detalle que a veces pues la gente no lo piensa, ¿verdad? No están, y entonces lo que estamos ayudando para analizar qué es lo que es los mejores pasos a tomar para poder tener éxito.
Ok, muy bien. Y ¿qué es un crédito bueno?
Pues como digo yo, es que el crédito bueno es lo que donde puedes calificar. So, entonces, es cierto que si tienes más alto la puntuación de crédito, pues más bajo va a ser la tasa de interés. Puede ser que lo que es el requisito para enganche también puede ser más bajo y lo que son el requisito para reservas puede ser más bajo. Como digo, con la puntuación más alta, es por eso que es importante que cuide uno su crédito. Pero también a veces la gente, como me dicen, me cuentan, pues yo tuve una bancarrota hace unos años pasados y nunca más voy a calificar para un préstamo. Digo, no, pues eso no es cierto, puede ser que ya se alivió, ¿verdad? Que ya hicieron las cosas que deberían hacer para estabilizar otra vez su crédito. Y si no han tenido los problemas de estar tardes con sus pagos y cosas así, pues entonces puede ser que tiene una súper buena puntuación de crédito porque ya cambiaste, ¿verdad? Ya estás haciendo las cosas bien. Y a veces uno no sabe y he tenido clientes así que pensaron que yo nunca más voy a poder calificar. Y ya cuando corremos los reportes de créditos y ¿verdad? Han mantenido su trabajo y han hecho bien que podrían comprar otra vez una casa.
Sí.
Y pues para eso estamos aquí, para ayudar.
¿Unas preguntas?
Sí, una pregunta que no hice en inglés, pero que ahorita se me vino a la mente. En esta evaluación de mirar el crédito, póngale que está un poquito bajo, ¿verdad? Por decir menos de los 620. Pero no miran el historial de cómo has pagado tu renta y cuánto es y que nunca has llegado tarde. O sea, eso no es un factor, o sea, no lo miran, ¿verdad? A mí, no lo miraría. Por decir,
ahora sí ya cambió como lo hacían. Antes no estaban viendo eso, ¿verdad? Pero ahora como están calculando la puntuación de crédito, ya depende, claro, de quién está rentando, porque si es una agencia de como property manager, tal vez, y si ellos están reportando, pues a lo mejor vas a tener beneficio de eso. Pero si es una persona que pues no, ni saben a quién van a reportar.
Sí,
pues
pero
entonces,
como es una compañía donde yo les he pagado siempre la renta. Y por decir, una renta de 2,500 y toco madera siempre se ha podido hacer, ¿verdad? Pero entonces sí lo miran.
Depende si
la
esta
están
agencia
mandando.
se lo están reportando a las agencias de crédito. Eso es a veces por eso dice usted, ¿verdad? Que pues yo he hecho los pagos sin falta.
Sí, right.
Pero, tal vez no te ayuda eso, porque lo que sí están reportando y eso es lo que están viendo, ¿verdad? Y como digo, eso es como una situación de usted, tal vez es bueno correr el reporte de crédito para ver, pues mira, esto es lo que está pasando, por eso no crece la puntuación, ¿verdad? Porque a veces uno, ¿verdad? Sin pensarlo, no sabe uno, ¿verdad? Que, por ejemplo, que si usted tiene una tarjeta de crédito con un límite de, digamos, 2,000, más, ¿verdad? De ejemplo, y usted le está, pues, compra la comida y todo lo que, ¿verdad? Paga las cosas de la casa con la tarjeta de crédito, y cada mes esa compañía de crédito está reportando que, pues mira, su promedio es como 1,800. Pues ya es casi 90% de lo que es el límite. Y porque están reportando que cada mes tras mes es 90%. Entonces, eso te afecta tu crédito, la puntuación. Porque como están calculando ellos, es que quieren ver que tu puntuación sea como, pues, o digo, lo que es la balanza al límite, es menos. Preferible que sería como 30%. Entonces, en estas circunstancias, ¿verdad? A lo mejor es bueno que, ok, pues mira, tengo la otra tarjeta de crédito, no la uso, pero ahí la tengo. En caso, pues a lo mejor es mejor usar las dos o las tres que tenga, ¿verdad? Y mantener una balanza de 30% de lo que es al límite de esa tarjeta. ¿Me entiendes? Y entonces, estos, en vez de nomás tenerlo en la única tarjeta, pues siempre se va a ver que como que estás maxing out la tarjeta de crédito. Y es mejor tener esa, como dije, un promedio del 30%. Y eso lo va a ayudar con la puntuación para que se mejore. Y cositas así que uno ni sabe, pero es lo que hacemos nosotros. ¿Verdad? Tenemos la educación en eso y le podemos avisar, pues miren, en las circunstancias de usted debe de ser estas cositas y puede ayudar para que suba la puntuación. Y hemos visto eso, que a veces sube, como dije, 60 puntos, 100 puntos, y va de uno que dice, pues yo tengo un crédito de 600 y ahora la tengo de 700. Y como digo, eso va a ser una gran diferencia en lo que es la tasa de interés y lo que es el pago mensual, porque va a estar menos, y pues todo eso es bueno.
Sí.
Bueno, a ver, José, y hay algo que se llama California Dream Pro.
Sí, son, ¿cómo se dice? Asistencia para el enganche. Down payment assistance, como dicen en inglés. Y hay una agencia aquí en California que te prestan, es un préstamo, y te prestan como hasta 20% de lo que va a ser el valor de la compra, con un máximo de 150,000 para el préstamo. Lo que importa aquí es que tienes que recordarte que es un préstamo. Entonces lo tienes que pagar cuando ya vendas la propiedad o vas a refinanciar. Y el beneficio de eso, pues ok, es, porque por ejemplo, si te prestan los 20%, ok, pues no vas a tener lo que le dicen mortgage insurance o aseguranza del préstamo. Eso te va a rebajar lo que pagas cada mes. Tal vez me preguntaste una pregunta antes como de, pues si quiero comprar una casa que es un poco más, ok, pues eso te puede ayudar también para calificar para esa casa que de veras quieres, porque ese préstamo está en lo que le dicen la segunda posición, pero no necesitas que hacer un pago cada mes. Es un préstamo, solo vas a tener que pagar, como te dije, cuando vendas la propiedad. Y en vez de pago, pues es como que ellos son tus socios en la compra. Y entonces, si ellos te prestaron 20%, ya cuando la vendas, pues regresa los 20% que te dieron. Y lo que subió el valor de la propiedad, ellos van a querer tomar 20% de eso. Entonces, si subió 100,000, pues 20% van a ser 20,000. Entonces, les pagas lo que le debes y los 20,000 más. Pero el beneficio es que tú ganaste la casa que querías, pudiste comprar, y vas a tener el beneficio en el paso largo, porque cuando vemos que no siempre que siempre van a subir los valores de la propiedad, pero parece que es así. Ha sido así en California por muchos años, ¿verdad? Que tienes el beneficio de que está creciendo el valor y la equidad. Y pues mira, ok, yo estoy tomando 80% de lo que creció la equidad. Es un buen trato también, si lo considera uno así.
Ok, muy bien. ¿Y cuántos programas para agarrar un préstamo? ¿Cuántos programas tienen?
Pues hay varios diferentes programas. Los comunes son como, por ejemplo, tienen un préstamo para veteranos, que para mí era mi favorito porque pues, te dan un gran beneficio para los soldados que han ayudado a este país, ¿no? Hay un préstamo como dicen, USDA, que es para propiedades rurales. Eso si te gusta el campo.
USDA?
Ajá, y ese es también un préstamo que puedes comprar con 0% de enganche. Pero, pues tiene límites de ingreso y tiene requisitos que, pues, de la propiedad. Tiene que estar en ciertas áreas muy rurales. So, no vas a poder comprar aquí como en Capitola. So, hay préstamos de FHA, hay préstamos que le dicen convencionales, son préstamos del gobierno y como que cada uno tiene sus propios requisitos y también las tasas de interés son diferentes. So, trabajan en diferentes maneras, pero depende de la situación de uno, qué es lo que te va a ayudar para poder comprar, ¿verdad? So,
Muy bien. ¿Alguna pregunta?
Yo sí.
Ah,
I mean, I'm sorry, pero pasa eso vivimos,
sí,
¿verdad?
sí.
para eso-
I'm sorry. That's what we came. Okay, so, back again. Dijeron que podemos comprar donde sea en California. You guys said that we could buy anywhere in California. So my question is, I know, like, thank God I would just go for one good thing. So there's jails everywhere, so I'm a counselor doing that. So probably case management or, a facilitator. So if I'm working, por decir, aquí in Santa Cruz County, but then I don't want to buy in Santa Cruz County. I'm thinking of buying down south. I mean, I'm just thinking, when I can, How would they, okay, they're gonna verify my income, but then how about if I want a property there?
Depende, ¿verdad?
Oh, okay.
Porque pues uno, pues, por ejemplo, sí, depende de tu tipo de trabajo, ¿verdad? Como yo tengo una amiga que trabaja en eso también, y ella siempre manejando para acá.
Sí.
Y también, como cuando pegó COVID, pues cambió cómo hizo su trabajo, ya no era necesario tanto manejar. Ahora además con Zoom, como le dicen, o por teléfono, puedes hacer tu trabajo. Y si esa es una opción que tiene uno, pues y si es la verdad, vamos a decir que, ok, tú tal vez puedas comprar esa casa en el sur de California, como tu casa primaria, ¿verdad? Tu trabajo está acá, vas a vivir allá. Ok, esa es una opción, porque tu trabajo te permite esa opción. Pero si dices, no, yo voy a seguir viviendo acá, mi mamá está aquí, ¿verdad? Mi familia está aquí, mi trabajo tengo que ir cada vez en cuando para reportar que estoy vivo. Entonces, tal vez, ok, esa propiedad no va a ser tu casa primaria, si está en el sur de California. Entonces, tal vez sería mejor considerar que lo puedes comprar como una propiedad de inversión. Acá, si la vas a rentar, pues, ok, y puede ser que lo que te van a pagar de la renta te puede ayudar para calificar. So, más depende de la situación de uno. Y ojalá que le ayuden eso. Como dije, todo depende de
la situación de cada quien, ¿verdad?
Sí.
Y también ayuda, a mí, no que quiero una mobile home, pero ayuda también con préstamos de mobile home.
Sí, hacemos préstamos de mobile homes. Nuestra agencia o compañía es uno de los pocos que hacen eso.
Porque dicen que es más el ente que tendrías que dar de una mobile home que de una casa. I mean, he escuchado, no, hasta ahorita les estoy preguntando.
A veces es la razón que debe, y es la razón, como dijimos, ¿verdad? Que debe ganar su preaprobación, porque usted puede comprar una mobile home con 5% de enganche, que ya sé que mucha gente a veces piensa, necesito 20% para poder comprar una casa, y para comprar una mobile home, ahora se necesito más. Y no es así. Depende de la mobile home, o la situación. Pero uno, si está comprando una mobile home que es más nueva, vamos a decir, puede comprar con un mínimo de 5% de enganche. Esa es la razón que le dijimos a la gente, a los clientes, que, ok, ganen su preaprobación, vengan para hablar porque así es como pueden ver qué son las opciones que puede tener uno.
Muy bien, muy bien.
¿Tienes preguntas?
Está bien.
¿Por qué?
Ustedes,
Háganle
¿qué
una
preguntas?
pregunta.
Ustedes, ¿qué preguntas?
Hola. ¿Chicas?
Una pregunta.
Question?
You guys learn some Spanish?
A little bit.
Cool.
I wish I could say yes.
And actually, they're saying the stuff really like slow.
Yeah.
Like slow, not like, oh, like asking.
So, I want to respect Jose's time, and thank you so much for
No, thank you.
coming by.
Gracias,
And
gracias por la oportunidad.
if this was valuable, please let me know because maybe we can
It
do
was,
another
oh,
one.
yeah.
And yeah, we would like to try to answer every question, but so if you guys have questions, people that are watching on YouTube, send me a message, and then or Jose. How can they contact you, Jose?
Yeah, our name of our company is Karma Mortgage Solutions, and you can find us on the web at karmamortgagesolutions.com. And if you have questions, you can also reach out to me on my cell at 831-234-7082. And you can reach out to me that way as well.
Cool. Thank you, man. I appreciate it, and thank you guys for coming by.
Yes, thank you.
Appreciate it.
Thank you all.
And you had a question, right?
Oh, do you have
What's your question? Yeah.
I was just gonna ask because I had heard about I guess that they were giving like first-time home buyers like money for to buy your first home. I was just gonna ask if you guys know anything about that.
Okay.
Well,
I think it's
there's the down payment assistance program that we talked about earlier.
Mm-hmm.
So that's one possibility. There's another, there is, like you asked earlier about a grant program,
Mm-hmm.
and there is a grant program which is different, right, from like the down payment assistance, because that one was a loan, you gotta pay back. The grant was for closing cost, and so they'll do up to $10,000 for a purchase for a first-time home buyer. You have to be, there's always guidelines, right,
Yeah.
and rules, whatever. But if you qualify, if you're in, I forget the right word that they use, but if you qualify for it, that might be an option that helps with paying for the closing costs. $10,000, good deal. You don't have to pay it back. It's a grant. So, and the qualification for like in this county, I think like if it's like a 2-person household or, I think it was around 100,000. So that was the income limit. So if it's, and there's for, 1 person, 2-person, 3-person, 4-person household, that kind of thing. And so, but that's, if it's possible, if that's an option for you, then, that's another possibility.
Okay. Thank you.
Sure.
cool. Well, thank you guys. I appreciate it again for stopping by. Remember, thank you guys.
I'm gonna give you guys those business cards. Thanks, you guys.
Trying to. For some reason I can't see the comments, guys, but
Oh, that would have been good.
let
Yeah.
me see here.
Next one. You live and learn.
Can't see the comments, but if you guys have questions, reach me on Instagram or Jose.
All right.
Can't see the.
How to deal with something like that.
For some reason,
Yeah.